Welcome, my fellow traders. If you have been wondering what is going on in the markets, you have come to the right place. You have found Riz International, and this is our weekly market recap. My name is Chris, and I am joined by the man himself, Rizwan Memon, a seven-figure stock trader who built his account from not a whole lot and now has a multi-million-dollar account. Riz, how are you doing this evening?
I'm doing well, Chris. Thanks for the intro.
Absolutely. No, it's great. It's great to have everybody. And if you're watching this on YouTube, please make sure you click that like and subscribe button. That would really help us out. But let's get right into it now. Let's take a look here at the S&P 500 because it has been a banger of a week, to say the least. You know, the week prior, we had quite the recovery in the S&P 500. Of course, we had this dip here. We kind of found this base here right around this, 4350 area. The market, held, it rebounded, but then after that, it has been downhill, for lack of a better term. But we did see quite a lot of buying pressure on Friday, though it was quite a whipsaw day, to say the least. Riz, I have no doubt that you have some things to talk about this. What do you see going on here in the S&P 500?
Yes, a lot of whipsaw, a lot of volatility, and in short, a lot of indecision. Intraday, but also day by day, which we are not, or anyone is not used to. It's not something traders like, whether they're swing traders, whether they're day traders or scalpers. It's really, really difficult and challenging, and I think I would say I would even go as far as to say that it's irresponsible to try and trade during these times, because we know that there is this massive up and down. Think of it like a seesaw, and it just depends on what direction it goes and the momentum and on how much the weight is and what side. And you can just be on the wrong side of it, and it's just not going to be a good time. This is why I say during these times, getting in and buying things, again, not really too stoked on shorting. As we know, the risks are crazy, especially with these major whipsaws, and so shorting is just not something I want to do in this kind of market environment since the beginning of the year. But it's not a bad idea for people to hedge. It's not a bad idea for people to build cash positions, take profits faster, yada yada. These are things I've said many times in Elite, and I know I probably sound cuckoo just saying the same thing again and again and again, but I have to really make it a point so that if one person or five people missed it the first time, hopefully those same five people don't miss it the second time. So it's crucial to protect the account in these kinds of market environments. How do you do that? You do that, one, by taking profits sooner rather than later. You cut down on the trades you take. You then make sure you have some form of a hedge. You can have a proactive hedge, like, maybe you have puts on the S&P 500, or you have puts on the NASDAQ, or you can bring up the VIX, take a call option on the UVXY or the VIX right here that Chris has brought up, and it had a bad day on Friday, but you could see that it has these crazy big vertical parabolic rallies, because volatility goes up like crazy all at once, and then it just sinks back down, right? And we see this happening. It's kind of like someone's heartbeat goes crazy up, and then just there's kind of like low zones. And really, these are the ways that people can, again, not all of them, but there are some of the ways. These are some of the ways that they can kind of hedge. Now, this is mostly, I say, for people that have a sizable account, know the pros and cons of hedging this way, right? Because if you're going to hedge, there's still risk, and you're essentially like you're paying insurance, right? And you can lose the entire premium of your insurance if things turn out well, right? Kind of like if you're paying for tornado insurance and you don't have a tornado, great, you keep your house, but you are out of that premium that you paid for the tornado insurance, right? Same way. But the hands down best hedge is carrying cash, having dry powder left to be able to utilize when the time is right. And which brings me to the next thing. When is the time right? Well, that's a loaded question that I ask myself all the time, but there is no specific right time. There is no 100% probabilities. There is no exact measure or exact level. This is all a game of probabilities, chance, due diligence, and of course, managing risk. So how do we go about this? And I'm going to lay it out for people right in the beginning who are joining us either, outside of elite, and of course for those in elite. There are key areas that, based on my experience, and it's not black magic, it's not some super secret, strategy or whatever the fuck. There's nothing like that. It's just experience. It's basic technicals. There's I can be wrong, of course, but as elite members have seen over the last couple of weeks, that we've seen this drop since the beginning of September, that I have been more right than wrong. And it's just the way it is. Doesn't mean I'm, always right, but I have been more right than wrong. And I think it's better for me to kind of give a few insights for those that are not in elite and are watching this to benefit from. So there are a couple areas. Okay. One, right off the bat, support zone you want to look at is 4,300, which we bounced off of. I mentioned this before in the middle of last week. I said 4,300 is one to keep an eye on. Okay. And as Chris highlights that light line there, you can see that on Friday, it bounced right around from that area. Remember, these are not precise measures. I'm never going to say 4,302. I'm not going to say it's going to bounce up from 42.97. You're not going to see me say that. And if anyone that does that is just fooling themselves if they think they can be that precise, because you can't. So these are just general areas, but you can still see, based on those candles from Thursday and Friday, that's the kind of near-term support per se. We've seen the markets touch that level with the wick below and pick up from there. So that 4,300 is key. Make sure whatever you do, I don't care what you have to do, put it on a post-it note, make annotations on your chart, whatever. 4,300 is where you want to log. The second area I want to bring your attention to is 4,240. Okay, and Chris will put it up shortly for you. And you're probably wondering, well, Riz, these aren't that big of a difference, but it is. It is a big difference. Chris, what's the difference between 4,240 on the index and 4,300? If you take that would be take 60. The ruler percentage wise. Sorry, I should have clarified. Percentage wise, yep, probably a percent, 1.3, 1.4%. So there you go. That's a sizable, red day in the market, or maybe across 2 days. That's a sizable amount in the index, right? So that's what separates between the 4,300 support and 4,240. Last but not least, the third critical zone, again, isn't too far below that. It's a flat 4,200 level. The flat 4,200 level is a full dollar mark, plus it's something we've seen the S&P 500 use as a potential support. Again, this area, I should say. It's not the specific number. Chris, what would happen if for us to get to 4,200, if you can take the ruler from where we closed on Friday, 43.57, down to 4,200, what would be that as a percentage? Roughly, it doesn't need to be that exact. There you go. Okay, 3.5%, let's say. So what am I saying? I'm saying potentially I wouldn't be surprised if we break below the 4,300. Think of it like a floor. If we break through that floor, we could potentially hit 4,240. If we break through that floor lower, then we could see 4,200. Okay, that's how you want to think. If and then statements. This is how actual traders do. We don't try and fortune tell. What happens though? People might be thinking, well, what happens if we don't get to 4,300? Then I think the market can go past this this moving average that we're at right now. I think it's the 90-day moving average or something, Chris.
That's correct,
right? Yeah. So I think we can route, especially after Friday. That's an if, though. That's an if. But that 4,400 is going to end up being a resistance point at some point. Okay, whether we like it or not. So just something we want to keep an eye on. If we break above 4,400 nicely, well, then we go. We're back to the races. Although we need to break this downtrend. If you notice, ever since the beginning of September, the S&P 500 for now is in a downtrend. Okay, there's no denying that. It is in a downtrend, and it's not pretty. It's not the most confidence inspiring thing. And I apologize for taking extra time in this part of the webinar, but I think it warrants it. I don't think we need to spend too much time on the oil and stuff like that, but it warrants this kind of breakdown on the S&P 500 because this is what people are looking for, and this is what's going to matter. If we see a broader sell-off in the markets, guess what? It doesn't matter if you own Apple, AMD, Microsoft. More than likely, your stocks will be down that day as well. Okay, so having that correlation to markets and knowing that is key. So keep an eye on these levels, okay? If, God forbid, we see 4,200 or lower, well then, you know what? We'll get to that point if we do, right? But Chris has that white line there. I think that white line is a 200-day moving average, Chris?
Yes.
Perfect. So that 200-day moving average that Chris has just pointed towards is the next area. Now, of course, you'll notice it's sitting right at 4,100. Wow. Right. So again, I'm not anticipating getting to that point. We did see some positive news. Remember, why is this happening? Okay, this is a pertinent question. Why? Well, a few things I've always said, and I'll repeat again. The market always has a wall of worry to climb, for better or worse, right? The good thing is it gives us opportunities to get in. The bad thing is, we go through volatility. Our portfolio is maybe lower, red, yada, yada. But I look at these things as good things and as part of a healthy market. If you're going to the gym and you're working out, you can't work out for 4, 6, 8, 10, 12 hours straight. You got to take a break, even from one day to the next. Maybe take a break. You got to recuperate. Same with the market. It can't just keep going up, up, and up, as much as people on Reddit and social media might joke around about that. But ultimately, these are the levels you want to keep an eye on, note them down, put on a sticky note, write it on your hand. I don't care. Do what you got to do. But think of these as support levels, that the moment we go from one support level to another, I want you to consider, okay, I'm not going to hold your hand through it, but I want you to consider, again, based on your risk tolerance and due diligence, maybe scaling in, maybe entering a little bit more with that cash on hand that I mentioned earlier to get into solid blue chip, like not just blue chip, but large cap companies that you see a good setup on. And I think this is the winning formula. I know it sounds super simple in theory, but in action, it's not that easy. But if you can pull it off, I can assure you, you will do really, really well. And not really, really well in the next day, but really, really well in the medium to long term. And what do I classify medium to long term? Usually past 3 months, okay? 3 to 6 months, I consider more than that to be longer term. So I would say, the chances of us, surviving this pullback, I don't see us going through another crash. I know that word everyone uses and likes to use that word, but I don't see us going towards a crash. A crash would be, to me, like a 30% drop from the highs. Chris, where are we right now in terms of pullback from the highs? Wow, not even 5%. Not even 5%, folks. So yeah, I know it's not fun being down and your portfolio is red and whatnot, but you know what? Opportunities are abound. And of course, my promise to elite members was tomorrow, Sunday, Eastern time, I will share a short list of some companies, stocks that I like, along with the ones I'll also share that I'm already in. And then out of that short list on Monday or throughout the week, I might take some positions, and then of course elite members will know in real time, and then they can decide, if they wanna get in as well. But yeah, enough about the S&P 500. One thing I did mention on my tangent, I forgot to mention, is I got sidetracked. Is why are we seeing this? Why are we seeing this drop? And I've said it before in the chat room, but I'll say it again here for everyone. We are seeing this kind of volatility for a few reasons, not just one. A couple of them you may already know. Number one, inflation is still a bit of a question mark, right? The next inflation print will be critical in seeing that if inflation is quote unquote transitory, as per the Fed, we will see if inflation is cooling off a bit. If it runs hot, continues to run hot, then I think the market's gonna be a little bit more irked, right? Another, treasury bond yields. Bond yields have been going up. If you've been trading for some time and you remember in the beginning of the year, I would say probably April, March, we saw a big sell-off in growth and tech companies. So essentially the NASDAQ. Why do we see a big sell-off, a pullback? Because bond yields were rising, right? I'm not going to go into the whole technical and the details of it, but ultimately, when you see Treasury bond yields go up, that means it gets more difficult for companies to borrow, and essentially growth becomes more costly, and that's a drawback for companies that don't have any profits, that have limited cash on hand, that have to borrow a lot of money, right? So that's another reason. That's why we're seeing a big drops in tech companies, even now, right? The S&P 500 is almost down 5%, but the Nasdaq is probably down a bit more. Another is, of course, the infrastructure bill, which we know passed, but the implementation of it is still, a whiles away, and ultimately we could see some uncertainty with that. And then last but not least is this debt ceiling, right? And you probably heard about it either on mainstream, financial networks or on social media or whatever. The debt ceiling, it happens every year, where because the U.S. keeps printing money, for better or worse, they have to raise the amount of money they can borrow. Because how are they printing this money? They're printing it just like accounting. It has to come from somewhere. It doesn't come out of thin air. They're borrowing it, right? They're borrowing it from investors, from in the country and outside the country, in the form of bonds and so on and so forth. So in order to do that, in order to issue more debt, they have to increase the debt ceiling, because I don't know the exact number, I think, Chris, but the U.S. Debt, I think, is total. It's in the trillions. I think the total U.S. debt is, I don't know, I have to take a look, but I know it's high. I know it's really high. Probably 20 million, something like that. Or sorry, 20 trillion.
Sounds about right.
Sounds right. You're not even gonna. Okay. Well, I'm just assuming. Someone can correct me later on. But yeah, I think it's in the trillions. I know that, but it's quite up there. U.S. current debt. But either way, moving on, I think these are the worries that the market is really kind of keeping an eye on. And like I said, today it's these. Next year it could be other worries, right? We know market doesn't like uncertainty. So yeah, something to keep an eye on. The current U.S.
I looked it up. It's 28 trillion.
Geez, yes, there we go. So I was close. I think I probably remember the number from a few years back. Well, it's 29. So 28, 29. Well, geez. Okay. So yeah, you can see the kind of issue with that, right? So they want to raise that. Congress has to kind of huddle together and, do tit for tat and take their sweet ass time to do something with the most they will do. They've done it before. They will do again. They will raise the debt ceiling. Now, there's two ways to go about it: the easy way or the hard way. What they decide, well, we don't know. And if they go the hard way, then we see a government shutdown and we see more uncertainty in the market. Okay, so just something to keep in mind. And I do thank everyone for bearing with me. I went on for 20 minutes.
No, I think it's important because, a lot of people want to know, well, where's the bottom? When are we going to hit the bottom? When should I buy in? And I think you really hit on an important part there, is like, no one knows where it's going to be. But when you hit these critical areas of support and resistance, that can be kind of an indicator for you. Like, okay, maybe now's the time for me to do a little bit of that, dip buying and things like that. And Liam, we'll get to your question here at the end. Don't worry. We will definitely take care of that. No, it's not that. We're using big, scary words that might get hit by the algorithm. I won't mention those right now. But no, it's these sell-offs, guys, are very important. Okay, this is a correction right now. And this is how we get in. This is how you buy low and sell high. So that's kind of the important thing. So let's take a look down here at the breakdown for the S&P 500 for the year. Obviously, energy rallying really, really strong these last couple weeks, and we'll see kind of why here when we take a look at the price of oil and what's going on with that. Riz, is there anything here that's really kind of making you raise your eyebrows?
Yes. So I think even it was last week I said, 75 $80 oil per barrel, I think is not surprising. I know we're on the asset class chart here, but yes, as you pointed out, XLE, massive rally. Why? Because there's currently lingering shortage of oil, natural gas, and actually crude oil in Europe because of supply constraints, right? And it isn't helping. It predominantly isn't helping the British and the UK economy because of Brexit. So there's more holdups for them. So ultimately, this uncertainty around European oil market supply is causing a bit of a an increase in our North American side oil stocks and oil as a whole. So to me, it's not something that I think is permanent, but where oil settles in its range is the most important part. And of course, we do know that in these kinds of environments where they're more inflationary, more volatile, we do know that certain commodities do better during these times, and that one of those commodities is oil.
Speaking of which, let's go ahead and take a look at oil here real quick. And man, somebody must be watching our replays because obviously my line here for oil is just about perfect at the moment. It really kind of ran up here to this 76.80 area, 76.75. Tapped that, kind of came back, and now it looks like we're grinding up a little bit higher. But yeah, quite a run up in oil here over the last couple of weeks.
I know, right? Chris, it's crazy. It's crazy how you mentioned that because I wish we got more people to pay attention and watch this. I wish we had more exposure. You know, that's why I always say, guys, like, subscribe, please comment, share, because I can't stress enough what we're doing here. And I'm not being biased here. I'm genuinely saying, as someone in if I were to put myself in another trader's shoes, I wish I had this. I wish I had something like this. I wish I was able to, see this visually and get weekly updates like this and be a part of the community and whatnot. But here, wow, like look at that channel, Chris. And even last week I said 75, 80 area, and look, it's a big strong push. Yeah, we ended the week solidly right around 76. But do we see 80 this week? I mean, it will be a big break, a big breakout, and I don't think it's a good thing for the economy. But from a technical standpoint, look at it; it's so strong, and really helped by the, like I said, the uncertainty around the supply of oil in Europe.
Is there anything in particular that's causing that supply issue that you're aware of?
Nothing specific, just supply chains issues. Like there's a lot of people because a lot of oil is imported in Europe, and guess what? When we have supply constraints due to OPEC not turning the taps on fully on purpose because they don't want to exceed demand, right? That's why oil has been rallying over the last year. So they've already kind of put the taps on at partial, not fully. And then on top of that, we've seen demand pick up. We've seen demand pick up overall, not just in the U.S. or North America, but across the globe. So European market is obviously big. It comprises of many countries. So, there's many reasons. If you have a massive pickup in demand across all these countries, well, then now you're kind of stuck. Already you had a limited supply. On top of that, you already have the global economy running at its limit in terms of production, whether it's semiconductors, oil extraction, whether it's, anything and everything is, I think, extremely supply constrained, okay, for better or worse. And that's what's caused rising prices, of course, from things like housing to commodities like oil to cars to semiconductors and chipsets used and needed for those cars to graphics cards for your computer or for Bitcoin or crypto mining, all the way to components for watches and even individuals that make these high-end watches. Because guess what? If, for example, if you wanted to buy a Rolex, you can't buy a Rolex from Rolex. Okay, just think about that. You can't buy a brand new Rolex from Rolex because they're all sold out and because supply is an issue. for whatever reason. So you have to buy it in the secondary market. You have to buy used or from a reseller or someone else. So this is a case we're seeing, and even down to human capital. What's human capital? The workforce, employees. I can tell you from experience that in the gas station business, it's so hard to find employees right now. And I think this applies across many sectors, many industries, restaurant industry, even the hospitality industry. It's so hard to find employees. And people will say, well, Riz, yeah, because maybe they're not getting paid enough. And I'll say, well, even if you raise the minimum wage, or even if you say, yes, instead of getting paid $15 an hour, we'll pay $17, $18 an hour for the same job. Okay, still not. So even an increase in wages is still not bringing people back in to actually do the work. And I'm not going to go into the reasoning behind that, especially here in Canada, because it's a long-winded discussion. But we are seeing this in all across North America, where people just they don't want to work, or they don't want to do certain kinds of work for the money that they get, whether it's high or low. It could be way better than what they would have made 2 years ago, but they still don't want to do it. Right? Maybe they got used to just doing things from home. Maybe they got used to YOLOing in the market. Maybe they got used to that, stimulus, or, employment insurance, or whatever. Right? And this is the negative aspect of a more handout socialistic type of economy. I'm not going to go on railing against socialism or advocate solely for capitalism. This is not a conversation we're going down, but we do know that there are certain things in the economy that once they go a little bit off kilter, they can wreak havoc on everything, ranging from products to services to the labor force to inflation, to just basic affordability. Like we've talked last week about real estate. We're talking about basic affordability for shelter. It's ridiculous. There's so many people that have just been priced out from ever owning a home unless something is done.
Here I thought it was OnlyFans, and then once they stopped doing, well, let's just say adult content, that we would have no problem in the hospitality industry. But sadly, it just hasn't turned out that way. It must be something deeper, and I think Riz kind of touched on it there, to say the least. I hope you guys got my joke on that one. Gold not really doing all that much this week rather. Really just kind of channelized here, and a slight downtrend, I'd say, on gold, but really not too much interesting going on here.
Yeah, not exciting. Gold is not exciting. Honestly, it's just blah. I don't have any gold holdings for now in the market. I mean, I do have some physical gold, not in the form of gold bars, but more collectible coins from the Canadian Mint that are one-offs, like limited creation. Like they're not in supply, so they make a few, and then they have a physical denomination, like a floor value. So one coin could be worth $50, like a huge fucking coin, like it's probably the size of your palm, and it's sealed up and everything. But then the value goes up because it's like a special minting process and different kind of image on it and whatnot. And it's only a couple hundred maybe made. So that's the kind of metal exposure I have, but nothing in terms of gold bar or no hardcore junior miners or gold or metal miners. The exposure that I do like for the sector are companies that essentially buy the rights to a mine, but they're not miners. They make royalty from miners. They don't actually do the mining. They're not in the mining business. They're not in the metals area directly, but they do have exposure to that area. Though there's some good question, good companies that I do look at, and that I will share with some of the elite members later on.
Don't let Riz fool you guys. He actually owns an entire fort. They call it Fort Memon. It's where the Canada keeps most of their gold bars. When they need it, they come talk to him. But no, I'm just joking, guys. All right, cool. Let's take a quick look at crypto. Quite the rally here over the last couple days, running right into the 48,000 area that it has hit before, and kind of coming back down a little bit over Friday and a bit today, as crypto is traded 24/7. Riz, any comments on crypto? I know
Yeah,
we're
I think Chris, whether in last week I said, yeah, it's looking good. I think if we can get to 48 and past, it can be a nice bull run, and we're right at 48.
I
um,
swear it's like people are listening to you.
yeah, yeah. I mean, let's see. I think it's like I mentioned last week that it was probably all that China, uncertainty because they essentially ban crypto every year.
Yep.
Every year, every 6 months, they're banning crypto. Like, I mean, how many times can you ban something? I don't know, but yeah, they keep doing a crackdown on it, and I said, you know what, the fact that all this stuff, all this uncertainty and all these negative things happening with crypto and Bitcoin still holding that 41,000 level was actually bullish for it. And we got that big rally recently. So let's see where it goes. Personally, full disclosure, I do not have any, direct exposure to Bitcoin or anything like that. So, I'm a bit agnostic on this, and let's see where it goes. Kind of just watching from the sidelines.
Absolutely. All right. Now, I know you said there were some things you wanted to take a look at here. Maybe a little something we might be able to give to the YouTube audience. What's on your radar for this week?
Yeah. So for now, I'm a bit cautious. There are, of course, some good propositions that are shaping up to take a look at. Remember, this is not the short list I was talking about, but there are some companies that maybe people want to add on their watch list or radar for this week. Maybe you have a position, maybe you don't. Um, One that I will say is looking pretty good, not the best, is Facebook. Okay, Facebook, I think it's setting up for a nice maybe scaling in type of entry. And I'm not going to go into too much detail for time's sake, but another one I like is Walmart. Walmart's completely gotten clobbered, way below my expectations. And right now, I would not, fault anyone for considering getting into Walmart. Not like, go all in or buy full position yet, but considering scaling in. I don't mind carrying this company for months and months and months. Okay, it's Walmart. It's like just like my Amazon position. I don't mind carrying for months. It's just I like buying a company that is so cash flow positive, that is continuing to do well, that's already, gone through this pandemic and done great. They've, you know, continued to pay a little bit of a dividend too. So this is something that impresses me. And then to have the stock come back down to mid early summer levels, well, I'll take that gift any day, right? So that's how you want to approach it. Okay, Walmart looks good. Again, it depends also on the sector. There's some sectors that are pretty battered down. Another one you can consider, again, this one was a bit too frothy in my view, but it's come back down to an area where it's not too bad. I'm not, frothing at the mouth to get it yet, but Adobe, EDBE, is another that's setting up around that 550, 560 area for a potential entry. Okay, really oversold right now. That's another. Again, there's one I mentioned last week was I think it was Merck I mentioned last week, and we know what happened with that, right, Chris? Big gap up on Friday, if you can see.
Look at that move.
Yeah, I know it did really good in the morning, and it kind of faded a bit, but still a nice gap up. I think of 9%. Moved up 9% from previous open. So because apparently they have their pill form of COVID. It's not a vaccine or anything, but it's this pill form that can, hopefully mitigate some symptoms along with hospitalization. So that is a huge one, as we know. And that's one of the reasons you'll notice actually that companies like NVAX, Novavax, NVAX went down. Right, so that a gap down because Moderna had a gap down, mRNA, because again the people are worried like, whoa, could be another avenue for dealing with COVID, and of course it's going to negatively impact some of these companies, right? So hopefully those kind of suggestions are something that people value, it could help them. Again, this is not an exclusive list. There's, I'm sure, others, but again, my short list and will be shared with elite members tomorrow, and then the subsequent entries into those will, of course, be shared with elite members in real time.
Awesome. Thank you for sharing that. I'm sure that a lot of people get a lot of value out of that. And if you definitely do enjoy stuff like that, please make sure you hit that like button. It really helps us, helps the channel grow. Would really appreciate it. All right. Now, a couple of questions. We were talking about, the debt ceiling earlier and things like that. And one of our members here asked, what does it mean by a government shutdown? And I think this is a very important question because I think there's a lot of misconceptions about this around the world. I know from my own personal experience, for those of you who may know or may not, my wife is not from the United States. She's from Ukraine. And when she came over here shortly after, we had one of these government shutdowns. It was a couple years ago. And her mother called her frantically asking, well, I heard that none of the police officers were working and it was just pure chaos. And, the fire department wasn't responding to fires. No, it's not like that. As Riz kind of alluded to in the chat, which I know people on the recording can't see, it's mostly just government workers, Social Security checks, things like that might not go out. It's honestly, I feel like anymore, it's just a political move. If you ask me, Riz, what are your thoughts on it?
Yeah, absolutely. You're right. It's not the end of the world. The country doesn't just, get halted and the lights no longer work or the people no longer show up for work or anything. It's not like that. It's mostly just politicians taking some time off for their own level of fuckery. I mean, and now you kind of know what my thoughts are on politicians. It doesn't matter. Again, I say it before. I don't care on what side of the aisle. I don't have any affinity or bias towards one party or the other, or one person or the other, because it's just not worth it. They're out for themselves, and ultimately, without going down this diatribe, yes, it just means that the government and more federal agencies are essentially impartial. I would say, let's just say they're not working at full capacity, if they ever are, but definitely not during a shutdown. We'll see Congress just checks out, it's in recess. They're no longer there. No bills are being passed. There's no Chris. There's some feedback on your end, FYI. And you know what? It's not the end of the world. I think government checks don't go out to people on pensions, so it can impact those few people, right? That are reliant. It sucks. It really does suck. But for the most of us, the vast majority, it's not really much of a difference.
I think in times like this, it's important, obviously, to remember the origin of the word politics. It's actually a compound word. It comes from two words: poly meaning many, and ticks meaning blood-sucking insects. So that kind of followed Riz's analysis of all of that. Now, I did get a couple questions sent to me via PM through our Discord channel, and I would recommend for anybody who can't make the live webinar, please don't hesitate to send us a private message. We'll be more than happy to take a look at what you want to take a look at. The ticker in question was pins, and you can tell by the fact I've got all my lines on here that I'm actually in this one myself. And so our member wanted to get our opinion on Pinterest and where it's going. Riz, what are your thoughts?
Yeah, so Pinterest has been a bit of a problem child, so to speak. Kind of on a downtrend, even after that gap lower. I have a position. It's a good grower in the social media sphere, so at least there's that. It doesn't make a profit, so it's a growth company, just like many of these tech stocks. But I think this 48 level is key. It has to kind of be above that 48 level. Right now, I'm still being patient. I'm letting it work. And if someone's in and they're making profits on it, okay, well now, maybe just honestly just take it off. Just wait to see if there's a better setup. If you're in the red and you're not in a hurry to sell, you don't need the capital for something else, you have the risk tolerance and the time horizon to carry, then yeah, I don't think it's mission critical just yet.
Awesome. Thank you for that. All right. So question here from the chat. Is it common for iron prices to drop during this time of year? Is it cyclical? At what point would you consider taking a position in LIF on the TSX exchange? Let me pull that up.
Yeah. So a good question. LIF is something I've carried for a while. Carried a bit too much, to be honest. It's not. I'm not too concerned about the company's great. The reason it's also been dropping is because they've been giving a lot of special dividends, um, in the form of cash payouts, right? So they've been giving a lot of special dividends. So like, look at that, $2.10 a couple days ago on a $36 stock or so, right? Just this quarter, right? So you can imagine the yield is very high. And when cash leaves a company at that end, at that scale, of course, it's going to have an impact on the stock price. But what also hasn't helped matters is because China essentially, all the news and the shift in policy in China has caused more uncertainty around sectors that were heavily reliant on Chinese infrastructure development. It's no surprise, with all this Evergrande fiasco. Evergrande is a developer, right? It's a Chinese real estate developer. What do developers need? Raw materials, iron, silver, all these kinds of things would guess what? If you have a big developer in China, and China has been a big part of the growth in silver prices, iron ore prices, well, guess what? It's no doubt that LIF or any other silver company, and I would say iron ore company, to drop. Right? Steel is a very important component in building. Maybe not just residential houses, but these large skyscrapers and these big buildings, right? That they put up in China, all across Chinese cities. So guess what? It's not surprising that the iron ore and thus Labrador is dropping. I don't think it's a big issue. It's a great company, solid management, and it's very cash flow positive, very low overheads. Uh, is it cyclical? No, I don't think it's not cyclical. Iron ore prices, sure, they have their periods of uptrends and downtrends, but it's not a cyclical per se. I wouldn't just call it a cyclical area. Okay, it very much depends on the economy. If you have an economy that's in a recession, well, guess what? I mean, you're going to see iron ore prices drop. So it's very reliant on a growing economy. It's very reliant on external and outside developing economies. It could be China, it could be India, it could be all these kind of countries that are looking to build and increase their infrastructure and residential, whether it's buildings or houses. You need that kind of stuff. If there's too much supply and not enough demand, well, guess what? Iron prices tank.
All right, looks like one of our elite members is absolutely crushing it with the dip buy list. Says he got in XOM from the list, and he's currently up about 10%. Awesome, well done, Razin. Wanted to know if you recommend closing the position to protect capital, or should he let it run?
Yeah, 10% is great, especially in a reasonable amount of time. It's nothing, to scoff at. And I think, what, if you even if you took profits, first thing Monday, you should be happy. What I do think is Monday is going to be key if we see oil prices continue to run. We know that obviously any oil producer, whether it's XOM or any other oil producer, wants and likes higher oil prices per barrel. And of course, 70, 75, even $80 is a great for your companies like Exxon to have. So it's no surprise that XOM has run up the past week alongside the run up in oil prices. Okay. So I would keep a close eye on it. If you see, XOM drop below 60, take it off. Just take it off. It's just, not saying it could go back down to 58 or 56, but just take it off, take the profit, move on. If you see it continue to move forward above 61 towards 62, okay. Now you can consider maybe scaling out or maybe just having a profit stop in place. Okay, because maybe this goes up to 64. Past 64, I would not bother. It's a multiple top, it's a resistance, whatever you want to call it. So yeah, otherwise, even if you took it out first thing for 10%, if you can, that's still a win and a great one.
Absolutely, well done, Resin. Awesome trade. All right, Mike wants to know, are we at mission critical on Wish? Is it time to go red alert or is it not? It says that covered call premium is fairly insignificant. Yeah, this one obviously got clobbered, to say the least.
Yes, Mike, great question, and obviously a painful one. Something I hold and down big on. But here's the thing. So although Wish is one of those companies, it doesn't fit my criteria or bill of a large cap, of a solid growing company that has fantastic fundamentals per se at face value. But if we look deeper, this is more of like a distressed situation where and now it's more of a turnaround play. So one of the reasons why I've hung on to Wish throughout this just absolute deterioration in price is I've looked at their fundamentals, but from understanding their business standpoint. I'm not a specialist in their business, but I do know someone personally, okay, who is very, very familiar with their business and the industry they're in, right? So, barring a long-winded answer, I think based on what I'm hearing and what I know from this individual, Wish is currently doing a turnaround. They're trying to change their business model a bit, and of course, they had a horrible quarter last quarter. As you can see, that gap down since then it's just been declining, and as a result, we're now at that spot where okay, it's selling at bargain bin price to the extent that they have more revenue in 1 year, okay, to cover the majority of the current value. So if we look at market cap to annual sales, this thing is just selling for pennies on the dollar, right? Even if they kept the existing business model and you were to value the company based on the revenue alone, wow, this thing, the architecture, the process that they have, the IP, the system, the everything that this business has, it's worth more than what the market cap is right now. And what's the market cap right now, Chris? It's probably significantly lower than a few months ago. Chris, all the way up, top tab, click there. And then once you open that, scroll down. Let's see, market cap. Sorry, go up again. You'll see it at the top. Scroll up, yep. So what is that? 3 billion. They have more annual sales than 3 billion, pretty sure, if I'm not mistaken. So it's a bit of a tricky one. It's a bit of a situation where will the market realize what this company is? Will the market realize that, okay, maybe this thing is way, way oversold? And in fact, if we take a look at fund data, I think there are some institutions that have gotten into this based on their previous disclosures. So I can't remember which ones, but there have been some institutional buying over the last few months. So fingers crossed. I know we never want to go based on luck, but based on what we're already in, what's happening, I feel like the last thing I want to do is cut this and then see that turnaround, see that reversal, especially with earnings, the next earnings coming up in a month and a half.
All right, so Neg Swara is now my most favorite person in Elite. He said that he liked my drawing skills, so here you go, buddy. Appreciate it. Awesome. Well, thank you, everybody, for coming out. Awesome questions. Thank you for all of your continued patronage here on Riz Elite. It means a lot to us, all of you guys here who are on the webinar or watching the replay or even watching it on YouTube. You're the reason why we do this, and we really appreciate each and every one of you. Riz, do you have any closing thoughts you'd like to end the webinar
on? No closing thoughts. Just again, a sincere thanks to everyone. I really appreciate it. It's always great coming on, talking markets. Always great questions and great interactions, and I just love the community aspect. I just love it. Honestly, I love interacting with people who share the same passion or goals. It's not really about making more money or whatever. For me, I just enjoy seeing other people become better. Okay, that's to me is worth more than anything else. So I love it a lot. Just seeing people, invest in themselves and want to become better and be interested. To me, it's very inspiring, very motivating, and that's one of the big reasons I continue to do it, because I carry this responsibility, this weight, better or worse, that, there's a lot of people looking to improve, and if I can help them, then I should, and it keeps me going.